Welcome back to Market on Close. We have just a few minutes left in our trading day. That, of course, means it's time for the big picture. We'll welcome in our team from Charles Schwab. Today, that includes Cooper Howard, the Director and Fixed Income Strategist at the Schwab Center for Financial Research, and Joe Mazzola, the Head Trading Derivative Strategist at Charles Schwab. Thank you both for being with us today. Now, Joe, I'll start with you. You know, another day feels like another record. We haven't closed it out just yet, but, you know, takeaways from the week so far.
Market digest anything and spin it as a positive. I mean, earnings are positive, so I think we have to start with that. 85% beat rates for the S&P 500, 68% and beat rate for the revenue, both very good. And now I think the market is maybe looking past that a little bit and seeing deals and pricing those in positively. In that, if we were talking about a 15% effective tariff rate 2 months ago, you would probably imagine the market would be selling off. But I think right now, just because there's the cloud of uncertainty is starting to dissipate, market's looking at that favorably and is now looking for ways that businesses, companies can now kind of price in and say, okay, what does that look like? What will that mean for profit margins going forward? It'll be interesting to kind of continue to hear the guidance, because there have been some industrial companies, namely GM, where they said, look, these tariffs are hitting the bottom line. But once again, it seems like the market's able to kind of see past that.
And Cooper, for you, what stood out on the week?
We didn't have as much fun as the equity folks had for the week. So it was a pretty quiet week on the fixed income side of things. And that's kind of been the past few months. I think that's been relatively one of the surprises. Other than kind of the April volatility, the 10-year Treasury has really been pretty range bound over the past couple of months. Despite all the tariff uncertainty, concerns that maybe the economy is slowing more than expected, concerns over Fed independence. So there's a lot of different things that are happening in the market, but the longer term portion of the Treasury market's kind of shrugging it off. So I think that's been one of the interesting things to look at over the past couple of months, and especially the past week or so.
Well, it's been quiet for you this week, Cooper, but next week, I certainly don't think it will stay that way. Of course, we have a ton of data coming out, a lot of earnings. We have the Fed meeting, importantly. We aren't pricing in a rate cut right now, but do you think that we'll get any details about what the rate cuts could look like in the future, particularly in September?
I do think that they might try to sprinkle something in there about how to expect the potential for rate cuts coming, or at least a bias towards wanting to cut interest rates so long as the data holds up. And if you look at where the market's expecting it, right now there is a 70% probability that they are going to cut in September. Now, there is a lot of data between now and then, so I think that it is also important to kind of see how things and how the economy develop. Now, as far as what to expect for next week, you're correct. We don't expect a rate cut. I don't think that really anybody across the street expects a rate cut. So I think that it's going to be maybe a hint or a two of rate cuts coming down the pipeline, but we're still projecting 1 to 2 rate cuts this year, again, depending on where the market and where the economy develops.
And Joe, as we look at all the earnings and all the data that we've got coming, who are you most looking forward to hearing from in terms of the companies reporting? We've got some huge names coming next week. And also, what data do you think is going to be the most impactful?
We have more Mag 7 components reporting next week. We're going to want to know a little bit more in terms of kind of what's going on with the AI spend, and Google kind of kicked that off and are up to have up their AI spend. And look, it's interesting because CapEx across the board is slowing with other companies, but as long as you're continuing to hear that AI spend go up, the Mag 7 can continue to rally. So I think that'll be important to listen to, or at least determine whether or not that trend extends beyond Google. In terms of economic data, wow, it's a packed calendar. Cooper already talked about the Fed meeting, but you have PCE, you have GDP, and then we end the week off on non-farm payrolls, which are at this point kind of skewing up toward, with analyst expectations, around 110,000 or so. Which is, that's a muted number. We're not expecting a lot of growth, but at the same time, it's not expecting contraction either. I think that's helpful. I will say one other thing, Marlene. I think this is kind of important because people in my line of business on the option side, everybody's looking at the market and saying, well, wait a minute, are we not pricing in risk at a 15 VIX? And I will say this. believe it or not, if you look at realized volatility versus implied volatility, we are actually at kind of higher ranges in terms of that spread. And here's the reason why: we have not had a 1% move in the S&P 500 in over 4 weeks. We have basically, just like Cooper was saying, it's kind of been a bit of a dull in the fixed income market. It's kind of been that way in the equity markets too. It's just a slow grind higher. It's a typical summer move outside of any major news. And even with major news that we've seen over the last couple of weeks, on at least in terms of tariffs and trade, the market's taking it in stride and chugging higher. So it doesn't look like markets are really pricing in much of a downside risk. Don't know if they're doing that, too a little bit too early, because there are a few data points next week that we should be kind of keeping an eye on. But at least at this point, it's kind of steady as she goes.
And Joe, with everything that's coming next week, what do you think has the biggest potential to move the market?
I think it's jobs. I think when you have to look at jobs in terms of the unemployment holding steady around 4.1, 4.2, that's been a bit of a tailwind for the market. That's kind of also kept interest rates where they're at as well too. If we do see some uptick in unemployment, if the job numbers comes in lower, you might see the probability of a rate cut increase. Maybe not necessarily for July, that'll already come and gone, but in September, Cooper's already said we're pricing in about a 70% probability of a move in September. That might ratchet up if you get a poor job data.
Well, we appreciate you both being with us for our panel today. That's Cooper Howard from the Schwab Center for Financial Research and Joe Mazzola from Charles Schwab.